The State Bank's Monetary Policy Committee has cut the key policy rate by 200 basis points, bringing it down to 17.5% from 19.5%. The decision comes in response to demands for a major rate cut to help boost economic growth. The MPC said the move considered various factors affecting inflation, aiming to bring it down to the medium-term target of 5 to 7%. Currently, inflation is at 9.6%, leaving a positive real interest rate of 10%, which had led to calls for a substantial rate cut. Financial experts expected a 150 basis points reduction, while some forecasted a cut up to 200 bps. However, industry leaders wanted a more dramatic cut of 500 basis points. A poll by Top-Line Securities showed that 98% of participants anticipated a rate cut, with most expecting more than 150 basis points. Throughout fiscal year 24, the interest rate was maintained at a high of 22%, with two recent cuts of 150 basis points and 100 basis points. Despite these reductions, the gap between inflation and the interest rate has prompted further demands from the private sector for more cuts. The government, having secured a $7 billion loan from the IMF, hinted that further rate cuts would likely stay below expectations to maintain stability. Inflation had reached 38% earlier this year but has sharply declined in recent months, giving the government room to stimulate economic growth while lowering borrowing costs. The projected growth rate for fiscal year 25 is 3.5%, up from 2.4% in fiscal year 24. Lowering interest rates is expected to encourage private sector investment, stimulate economic activity, and create jobs, particularly for young people seeking opportunities abroad.